Okay, so CoreLogic has a piece, Matt. 10 things to know about the mortgage and housing market right now, as of August 2020.
So I wanted to stick with the single-family home topic here. Just a little update on what the single-family home market is doing. The story has been low home sales, but still high home prices, and that's about the same. I'm not going to cover all 10 here, but I just wanted to review.
What are some of the highlights?
Market's still characterized by high mortgage rates. This environment is not going to fade away anytime soon. And it's not going to fade away the instant the Federal Reserve starts lowering interest rates. I'd like to think that maybe there's going to be a psychological effect, but I'm not going to count on it. I don't think the home buyers are watching the Federal Reserve as much as like stock traders are, so
but I don't think they're watching the Fed, but I think that people think a lot about interest rates more. The general public's thinking about interest rates more than they did over the last couple decades, just because it went from like, They've heard friends who locked in 2% interest rates, and like, that sounds great, and they know the reason why they can't buy houses is because of interest rates. And so for that, and then they've been told by a real estate agent, well, wait until rates come down. So I think I think it's more conscious of it.
Totally. Then I'll skip to the last one before I get into the first one here. Nearly all borrowers, 92%, currently hold a mortgage with a rate below 6.5%. There's your lock-in effect right there. But back to first time home
6.5%. I mean, some people,
that's still pretty high. So that's
high,
but the market,
but still, the weighted average outstanding mortgage rate is 3.93.
Okay, well,
which is the highest in 4 years, but that's still in today's world, that seems pretty good.
Yeah. So the select few, like I think we've said before, it's the people that have to buy are still buying. It's just relatively few. First-time home buyers particularly are still elevated compared to 2022, which reflects this lock-in effect that we're talking about of existing homeowners not wanting to sell their home and buy a new one with a higher interest rate.
That's probably some demographics also. There's just like more of the cohort that would be a first-time home buyer.
Yeah, I think that could be it too. And I don't know exactly the dynamics of what happened with the lower interest rate, because it seems like in 2021 in July, the first-time home buyers were at 38%, and interest rates were quite low then. So there is some volatility here that is unexplainable by interest rates alone.
I mean, bottoming in on July 22 makes sense.
Yeah,
that's just because
that's when rates really.
But it's all within a pretty tight band. I mean, we're basically just talking 34% to 40%, and we're kind of at the mean, and really, again, I think it's the
we're above pre-pandemic. It looks like
exactly. We're above pre-pandemic, and I think again, this is demographic driven. This is just the large cohort of 30-somethings who are looking to buy their first home, and even though that less of them can afford to, there's just enough of them to maintain this level.
And so Another development here is, so loan to value decreased 2 basis points to be 89% for first-time home buyers and 79% for repeat buyers. In contrast, the average debt-to-income ratios have steadily increased over the last few years due to the unprecedented surge in home prices. I think mortgage payments and debt are getting tough, and it's not difficult to see higher interest rates as a factor in debt-to-income ratios alongside the increase in home prices. Also, the median list home price and median sold price are up 10% year over year in July. Buyers outnumbering sellers here. Continued price increase, very strong indicator of housing demand, and home sizes are increasing as well. So there are strong aspects. This really paints a picture of the pent-up demand that we're seeing, and it helps to explain the low home sales. I have covered, whether in the newsletter or on the video here, all different angles of saying the same thing. Home prices are high, sales are low, and it's because of the high interest rates. And this confirms it here, puts a little bit more numbers to it, and maybe there's a shred of hope that things will loosen up in the future.
For home buyers, that would be nice. I think what's we can be sure of is that the demand for housing is very strong right now, whether it's for single-family homes or rentals, but people looking for a place to live.
And as a complement to the Atlantic article, it's not just interest rates that are going to free up the housing crisis. Interest rates alone are not going to solve this problem. We have to have a regulatory environment where it's easier to build and increase the housing supply. Otherwise, potentially, all that's going to happen is housing prices go up, catastrophic.
Well, that's what. And getting back to last week's episode, talking about proposals, policy proposals from the Harris administration, Trump administration. There's talk of a $25,000 first-time homebuyer tax credit.
Yeah.
Looking at this data, is it really needed? It sounds like about more than a third of homebuyers are all first-time homebuyers anyway. It begs the question: is buying a home a right as an American? Should we all get assistance, and is that the best way to do it? Or, as I believe you just suggested, Matt, is again, if we give just more supply, the prices will become a little bit more normal, loosen up a little bit, and more folks will be able to afford a home.
It just seems like the logic of it.
They need to raise the prices so the housing market crashes.
Yeah, exactly. So I was colored by the first interpretation of that $25,000 idea. That's colored. That's biased me forever against it, because it's just like they even said, like, okay, they give a $25,000 subsidy to first time home buyers. How in the world does that not just make housing prices $25,000
prices don't
more
go
expensive
down in that scenario? When more people all of a sudden can buy. There's more buyers in the market who have a $25K check burden in their pocket.
Yeah,
exactly.
And there was there was even explanation on how they would try to make that money so it's a tax credit, but they want to also make it so that it contributes directly to the home price, so they can use that money right away rather than kind of waiting for the taxes to come in. And so this is really
like a mail-in rebate,
a little bit, but so they could actually use it. I don't know what the language was, but that was basically it. It was they want to make it as applicable as possible to that actual purchase action for the house. And again, it's so close there. There's no way to think
they'll
of it
come up with their, Federal Reserve, cryptocurrency, the Fed coin, and they'll issue just some FRN coins.
Yeah. That's. Oh, I thought you were going to say maybe like a coupon redeemable only for one house, like house bucks you could only spend on. I don't know.
Yeah, that basic. Yeah. On chain.
I do think again. The policy, if you spent that $25,000 and contributed towards the increase of housing in general, rather than putting it on, giving it to people, it feels mean. But I think that will get you somewhere a lot more productive than to just increase the prices in this way and inject that money into it. It is the fact that it is. So if you're giving $25,000 to everyone, no problem. But the minute you're saying it's only when you're a first time home buyer, then it's like, well, that specific thing, that price is going to go up. There's no way that it doesn't, right?
Yeah.
I don't know.
Yeah. And again, it's just, to me, that's just too much of the government just absolutely putting their thumb on the scale of a part of the economy they don't truly understand.
Yeah.
Because it's obviously for political purposes. It's not for actual, this is going to fix the problem. This is just literally, hey, you are voting block that I need. What if I hook you up with $25,000?
Yeah.
Would you be interested?
Sweet. Let's see how that goes.